What's happening, guys? It's your boy TV back at ya. I missed yesterday's video, so I'm coming back hot today with some hot takes, some hot charts. Let's just jump right into it. Yesterday we got a big old green day after our little bit of a sell-off on Friday, where we gave back half of that big fat green dingus we got off the CPI. So last Friday, we gave some of that back. Monday, we come in with a hot, and I mean a hot gap up. We gap up from 25.81 all the way up to 36.41, just a massive gap on the S&P. And after we gap, what's it do? Just melts up with really, I mean, not a lot of movement. A very choppy day. If you didn't catch this initial move, if you didn't have calls overnight, you couldn't make much of this price action. There was a little bull flag right there, a break, that would have been nice, but still not a lot of movement. So it's a weird kind of day when you see days like that. I'm just going to talk about what happened today, and then I'll get into where I think the market is heading from here, what I am making of this general price action that we've had these past few sessions. But then coming into today, this morning we gap up huge again, a monster, and I mean a monster uh, gap to the upside on open. We gap up about 2% on the S&P, but unlike yesterday, we did not continue to the upside. We dumped and did not really like a dump anywhere lower. We dumped literally to the high of day yesterday, and now we have support there. And look at this key level. Boom, I've had this key level here 36.91 for weeks now. And look at that level. It held up perfectly. We pull back, get a nice little tweezer bottom candle, and we pump off of that. But other than that today, it's been kind of a reddish feeling day. There hasn't been a lot of green. We got the initial dump. We get a nice little push up. And then we have Apple come out with news saying that they're telling one of their Chinese manufacturers to halt production on the iPhone Plus, iPhone 14 Plus, that smartphone. And that spooked the markets pretty bad. We got a nice little dump off of that, and we've almost fully recovered that now with 5 minutes left in the day. It looks like we're getting a little red at the end of the day. But overall, we're still putting in a green day on the day. Nasdaq a little bit weaker than the S&P, but look at this level on the Nasdaq. Just held up perfectly right here at 269. That's where we dumped off of. But today, personally, my trading, I mean, I only took open and closed one trade today, and that was literally just a very simple high risk, low risk, high reward kind of trade. Because overall, I'm pretty bullish on the markets at this very moment, in at least a short term. I mean, even for the rest of this year, I'm pretty bullish on the markets. If we can get through October without completely crashing, I'm very bullish on the markets. But, anyways, my trade I took today, we are opened up here, monster gap. We're selling off, selling off, selling off. I'm bullish, so I'm thinking, all right, we came down to this level right here I had, 272. We bounced right off of it. We're getting a bounce. I'm thinking, all right, if we break out of this trend line, and it looked like we were about to, I grab a call. This is my stop loss right here at 272. And it instantly just dumped. And I respected my stop. I took a tiny little $23 loss. Just a little scrape, no big deal. Obviously, would rather it would have broke out, gone to the upside, but that's the best trade I could ask for. That's not a winner. That's the best way to lose. You're gonna lose trades, and that's the best way to do it. Just respect the stop loss. My stop was the low a day. We break through it, and I'm glad I sold right there because you know what? It kept dumping, dumping, dumping. But we did recover. It never went green, but then it dumped again. So it was a 2 day out call. I would have lost money either way. We never just catapulted back up to the high of day today. But overall, just a very strange day. I don't know how we go from gapping up, holding the gap, and just like sitting there all day yesterday to getting another huge gap up today, but it just going straight back down. I mean, it was crazy. And that's partially why I didn't do a lot of trading because my plan was to trade upside today, and which I attempted to, but failed. But when we gap up like 2.5%, I mean, how much do we gap up on the Nasdaq? Yeah, about 2.5% on the Nasdaq. You know, I'm not looking at upside when we're already gapped up 2.5%. Like that's just crazy. Even though it happened yesterday, so that kind of threw my plan wonky. I was not going to short anything today. I have a very bullish outlook on the market. I'm going to get into why I am thinking like that. But just especially when we get a huge gap up and just immediate, I did not see the gap up and think, oh yeah, I'm shorting this. I imagine it's gonna tank, but it did, and that's just the way she goes. So I abided by the plan. I took a tiny little L, but right now I am holding. I'm back in the AMD baby. I'm holding an AMD $60 call for next week. It's very small. Only got one of them. Right now I believe we're at like break even on it. Yeah, no, there were a few bucks. I mean, it was up like 25% at one point today, or no, up about yeah, about 15%. But I am overall thinking AMD is looking bullish. It is not something I would think of shorting at this very moment. I mean, it is just absolutely in the dump. It has dropped 46% over about a month and a half, and I mean, that's not all my technical analysis. I'll get into what else I'm seeing, but just semiconductors in general are so beat up right now. They have been leading the market down, and typically when we get these relief bounces, they lead the market back up. So that's why I look around for. And AMD, they have their earnings coming up here, 1st of November. But they already, my big conviction on AMD is that they already gave us news about their earnings. They already cut their forecast, they slashed expectations, and almost every time that has happened this year, the company slashes expectations, it gets priced in, it got priced in here. Look at this, it got priced in, obviously it got priced in. It priced in, it dropped about 14% on the day that that news came out. So that's it, pricing in that bad news. It's been priced in, but now when we get its earnings and then its new forecast, if it comes out strong above what they forecasted it to be back here, then that's super bullish. And that's happened multiple times this year where companies have come out, they slash their earnings, and then they get a beat on their earnings on the new forecast, and stocks flourish. They rally. But otherwise, I'm just seeing a lot of consolidation right now in AMD. We're seeing in this kind of this rising little channel here, which is, I mean, it could be a bear flag. You could argue it's a bear flag, but I am just not of the opinion that AMD will dump another 20% from here. At least not yet. It will. It could over time, but right now AMD's sitting at $58 a share. It just seems like it's priming for a big bounce, and it is looking like it has had its chance. It's had multiple opportunities to just fall through the floor, and it is refused. It's bounced. We bounced off this little trend line right here. Let's see if I can make it nice, nice bright green. Come on, bright green, bright green. There we go. Can't get a lime green on this stupid program. Bright blue. But we bounced off that trend line twice today. That would have been the perfect entry for my call. I did not enter there, but look at that. We bounced off it here, bounced off it right here after the Apple news came out. The entire market dumped. All of the stocks went down. But you see this trend line, we bounced there, and now we have a clear demand zone right here. Very clear right here, starting in this rectangle, starting at 56.50 and below that. There are just buy orders absolutely just waiting there for a chance to come in and buy. And you could see every time it's dipped in there, dips in, bought out, dips in, bought out, dip, bought, dip, bought, dip, bought. It just touched it. It just touched that demand zone today at 56.40 and just bounce. So AMD is looking prime for a bounce, in my opinion. This is very low risk. I know AMD can do crazy 8% swings overnight, so I'm just going low risk. I know I got burnt last time, but I think I might have just been too early last time. I'm thinking we're looking ready to bounce in a big way on AMD, and we do have this very clear trend line resistance right there, this big red one going right there. So if we run up again and meet that at $61 and break out of that to the upside, we have just a big old volume gap. There's a big volume gap right here that we just dump through. I think we could rush straight above that as easily as we dump through it, and also just a massive gap from 64 to 67 on AMD that I imagine will get filled before the any more like terrible news comes out and the market decides to completely dump again. But anyways, overall, looking at the market, the reason I am actually getting pretty bearish, pretty bullish on the market right now is because you start to see these crazy kind of days where you get massive green followed by massive red followed by huge green followed by more huge green with crazy swings. You see these crazy kind of high volume, high volatility days. These kind of things always are happening. Close that up. I don't need that open. Those are always kind of happening towards the bottom of these pullbacks. You always see that over here where we had where we made this previous low back in June. You could see that right here. Massive red day, huge green day, big red day, big green, big green, big green, big green, and then you eventually ripped out. But these are the kind of just crazy trading sessions that you see towards the bottom, and we also know that VIX is elevated. You got to see VIX. I have to see VIX below 30 to support my thesis that we are going to see a relief rally here. But VIX has just been stubborn, but it is coming down. And look at that. It's coming right out of that supply zone. Every time it gets up there at 34, 35 area, it comes down from there. So all these things considered, we're very close to being out of October, and that all along has been my plan that we would see a bloody October. That October is always when the crashes happen. It's always when these big black swan events come out and just dump the entire market, and we're almost out of October. And I think if we do make it out of October without one of these events, I think we will see a rally through the end of the year, through December, at least until into January, where we will probably finally see earnings actually very much pull back in a like broad-based sense, not just like right now earnings are pulling back huge on semiconductor businesses, many different tech businesses, but it's not been like a broad base, like an entire everything's pulling back. We're not seeing that. It just ain't happening. Banks just had fantastic earnings. It just isn't happening. So I think, just like I said during or before summer, which I was 100% right, but even though I was not trading as I should have been, because I was completely right that we were going to get a big earnings rally in the summer, because I thought the stock market was overreacting. We sold off too hard. I do not think earnings were going to be that bad, and it ended up being 100% true. And earnings weren't that bad. Everyone was like, what the hell? We're supposed to be in a recession. Look at these earnings. So I'm of the opinion 100% that we can still get that same situation here again this earnings cycle, because we know with the data, we know consumers are still spending, we know unemployment is not moving, people have not lost jobs. That's what ultimately hurts earnings, is when people start to lose jobs, they start to save money, or they don't save money, they start to cut their spending, and that just isn't happening. Wages are still going up. All these things, all these factors are still pointing us towards strong earnings, and I think the market is looking for any reason to bounce, and it will 100% bounce if we get strong earnings. So that is definitely what I'm looking into. I cannot predict the unpredictable. Earnings could be horrendous, but I'm just not seeing it. We have not. It's not been long enough. We have not waited. Sorry, a text just came up on my phone. It derailed my train of thought. We have not been sitting at high interest rates for long enough for companies to actually be affected by them. These things, like I've said many times, it takes 6 months to a year for these interest rate hikes to actually affect these businesses. And it just hasn't been long enough. I mean, it's only been a year of tightening, or not even a year. It's been about 10 months of tightening, or 9 months of tightening if you're considering Q3 earnings. So with that in mind, I do not believe earnings are going to be absolutely miserable. That's why I say we could rally into January, where we will potentially see earnings be bad if people start tightening their belts for the holiday season. But that is kind of where I'm headed towards, because we have gotten every reason imaginable to completely dump. We had our CPI data came out, and it was terrible. But what did the market do? It went straight up, and it's had opportunities to dump, but it hasn't. It just has not. We have unemployment rate that hasn't gone down, or hasn't gone up, I should say. So we know the Fed is going to be very, very aggressive. But all these things are just known, and the market is still not dumping. So this is making me think, oh, this is the kind of thing. This is what it felt like back in June, where we were like, oh, things are so bad, inflation's so bad, but the market was just like, well, we've dumped. I guess we can go back up, and that's exactly what happened. And I think this time could be not as huge of a rally as this August one, but it could be violently fast because there are a ton of people sitting in shorts right now, and when you start to squeeze them to the upside, that just keeps it's just a snowball to the upside, and it honestly feels like we have more panic buying than we have panic selling in this market. It's crazy. I know it sounds insane, but there just has not been that panic moment. So unless that happens, I'm feeling quite bullish on the market right now. Just looking at the Nasdaq right here, we are right up against. Let's actually do NDX because it's a little cleaner. Nasdaq, we do have this trend line resistance right here, and we tapped that. Look at that. We opened up to it. We ran up to it, tapped it. That's where we dumped off of. So if we do actually break to the upside, we're definitely going to have to break above this trendline resistance. We do have more of a gap to the upside. So I imagine if we break that, go to fill the gap to the upside, and we find some support up there, what level would that be? At that price, at 279 or 280 on the NASDAQ, that is looking mega super bullish. But that has just been the level we have not been able to hold. It has been the make or break, and you could see that the market has tried to break it over here, try to break it there, try to break it there. We break it here, we're holding, we missed it, we break, and dump, and we have not retested that 280 level yet. So I'm pretty convinced we're gonna at least see that. Holy crap, is the market really? Wow, Nasdaq is really green after hours right now. Ooh, that's nice. Look at AMD. AMD not that green after hours. God damn it. Uh, that's always what happens. Oh, did Amazon have some good news or something? I gotta look into this news. This could change my thesis. But anyways, I'll look into that. I want to talk about earnings that we have. Maybe J&J came out and had really good earnings or something. Or no, Netflix had earnings today. They were probably pretty good. Tomorrow we have our Tesla earnings. Pretty massive on that. IBM earnings. We have Lam Research for the semiconductor sector. Equifax, and then on Thursday, nothing really huge on Thursday. I mean, Danaher and L'Oreal and Philip Morris, Union Pacific, AT&T, nothing huge. I imagine those are all going to be not great, but nothing that's going to really move the tech sector. And then Friday, we have American Express, which that's actually going to be a pretty big one because they're a credit card business that tells us a lot about how much Americans are spending on their credit cards. Then Verizon, same thing, telecommunications. But then next week we got some Discover on the Monday next week. Tuesday is a big one. We got Google, we got Visa, we got Coca-Cola, huge. Wednesday, Microsoft, Meta, Boeing. We got big earnings next week. Then jumping down, then we have Apple, Amazon. I mean, next week is all the FANG companies, all the mega cap techs. They're all releasing earnings next week. So it is just like we've dumped so much recently. I mean, it has just been a monster dump on the Nasdaq. We have completely hemorrhaged since August. We have dumped about 23%, 24% from that point. So I don't know. You tell me. What do you think? We're just going to keep dumping from here? I don't know. We've gotten bounces over here. We dumped 24% there. We bounced. It just seems like you look at the weekly, you really zoom out, and this looks like what's happened. We get a leg down, we get a bounce. Leg down, bounce. Leg down. That's right where we're at. Looking like a bounce. But anyways, looking at SPX again, I'll give you guys my levels on that. SPX, the critical level reclaim that I've had up here at 37.42. Look at that. We opened up above it, we tested it, bounce, and broke through. So that's the key level to get ahead of, to get out of, to break up above 37.42. And then we know right now, look at this level. It's beautiful. So this was where we were seeing sellers. We had supply up here. This is where we sold out of, right there. We sell out of it again right there. And now look at that. That past resistance is now support. So we know support is right there at 36.90. Anything below that, I'm looking a little short. Anything above, but anything in between these two levels, I don't really know if I want to touch. I imagine we could see some chop in between this support and resistance. I need to see a breakout to the upside to really get bullish. But then above that on SPX, we have 37.91, and then we also have to zoom out and take a look at our trend line resistance. This is going to be sitting way up here. Or maybe, I mean, you could even argue that this is the true trend line that we've already broken out, because you see where we got that fake out breakout up here that we dumped right below it. So, I mean, you could argue that we're already broken out if you did hold up this trend line. But say that's not the true one and that this is actually the true one, we're still going to run up to it. Same with the Nasdaq. But the Nasdaq has an even cleaner one. But I don't know. It feels, everything looks like, you see these crazy big old candles on the bottom. This feels, it looks, it is looking like this is where we start to see the bounce. So you guys just trade your plan. I'm ready to go back to being short if we do see a sell signal on the SPX system. If we see a break below 36.68 right here, although it's going to be up here at like 36.70, this 50 moving average on the 30-minute chart, if we see a break below that, I will look to short. But I imagine we will see some kind of price action where this yellow line comes right up here to this little price level I have, this key level of 36.92, and we get a bounce confirming that we are bullish, and then we'll see a leg up. But if that doesn't happen, if earnings are terrible, and what the hell do I know? But this is just what I'm thinking. This is what I'm seeing. And you guys stick to your plan, trade your plan. Take it easy, guys. Good luck.